Everyone, myself Vaibhav. If you consider the prevalent sentiments in the market today, we can see that the price action on the equity side is increasingly turning bearish, and one of the significant factor has been the failure of any conclusion of the stimulus talks. And I think now this will be left for the new administration in the United States, and this has also helped the gold. And in yesterday's session, we saw gold inching higher, but now it has corrected somewhat and it is consolidating closer to the US dollar 1920 range. And as things stand, I feel that the situation is turning favorable for the gold to move higher, and that's why today's title is gold gearing up for the USD 1950 levels in coming session. If we consider the trading context for the day, there were not many releases. We got this German GfK consumer confidence data, and for the month heading into November, so this is published earlier, and the sentiments tell that the situation has actually deteriorated, and now for this month we have the reading at minus 3.1, which is also lower than the prior month reading of minus 1.7, and this is happening mainly because of the resurgence of the COVID cases in the Germany, and that is going to take the situation from bad to worse if not controlled. So let's see how the administration will handle the uh, newly rising cases, and the effective response is going to play a vital role there. Now moving on to the North American trading session, we are scheduled to get the initial jobless claims, and I think not much of a surprise is being expected, and we can expect this week's number to be likely around the average only. And for last couple of weeks, the average has been around 870K, and I think even in the US, the cases are rising, and some of the restrictions are coming back. So we might see slight rise there, and the initial jobless claims can be expected around 900 and 900K. We also have the election campaign debate for the US presidential elections, and here Mr. Trump and Mr. Biden will spar over the policy measures, and let's see how it goes for the election campaign of both these presidential nominees. Now shifting our attention to the technical segment, here we will first cover the gold, and then we will also consider the NZD USD amongst the currency pairs. Let's start with the gold, that is XAU, in terms of the USD's technical outlook. This is the daily time frame chart, and I think a couple of sessions back also we had seen the possibility of gold continuing its sideways trajectory with a bit of bullish bias, and those things have actually now, in hindsight, we can say that we were prescient, and things have pretty much evolved as per the anticipation. And even now I feel after this long consolidation phase we can expect the new swing high formation in near future. Of course there is nothing like certain 100%, but the probability it seems is in the favor of gold's price rise, and considering the failure on the part of US administration and the Congress to pass the new stimulus measures, I think the sentiments might be in risk of mode for a foreseeable future, and that is also going to help the gold's cause. So coming to the 4 hourly chart, we have the initial support zone in place around this USD 1910 levels. Here we have seen the gold consolidating for almost a month now, sorry, for last couple of weeks now, and if you consider the last week's price action here, the gold was earlier struggling to cross and hold above these central pivot point, but after this crucial break here, the odds are now clearly in favor of the price rise, and even if we consider the regression curve, it is also sharply bent on the upside. So taken together, both of these factors are pointing to the conducive environment for the price rise in gold, and all we have to do is watch out for these crucial marker, the central pivot point, and as long as the price action is concentrated above it, we can be fairly hopeful of catching these possible bullish moves in the gold. And of course, for us, the major concern always is the risk reward ratio. We want to get involved at the optimum level so that the risk reward ratio is also in favor. If we happen to be wrong, we don't really want to lose too much money, and of course if we are going to be right, we should be making too much money. So looking at that aspect, I think the confluence zone of these 50, 100 and 200 SMAs in this price band of USD 1910 to USD 1915, we have to see if we can get the entry point anywhere in this price band. Earlier in the day, we had this opportunity to go for that price level, but now we have already seen reversal from those levels, and now for the day, if we are going to get the fresh entry, we will need to be fairly lucky to get it anywhere close to US dollar 1910. But in market, you never know. So let's see if we can get that entry point. The only thing is that it is going to cut down on our possible stop loss level. If we get entry anywhere close to this confluence zone, the SMA support area, then I think the stop loss just little below this immediate swing low, which is there around US dollar 1895, should be good enough for our risk containment measures, and for a risk of around 15 USD per ounce, we can target more than 30 points on the higher side, and as is the title, we can pretty much keep our target price closer to the USD 1950. So we will be getting the risk reward ratio of 1 is to 2. Now moving on to the NZD, the New Zealand dollar. The NZD has been in the consolidation phase, and as you can see, after rallying strongly, it had this second leg of this higher side movement, and now for last couple of weeks, and I think even starting from the first week of July, it has been fairly range bound in between the 0.65 to 0.68 level. That's around 300 pips range, and for this month it has hovered in this 100 pips range, where it has found the support around 0.6550 level for last two occasions, and now I think we can expect the weakness prevalent in the USD to help the NZD USD gain some price moves, and we can expect the NZD USD to break above this immediate hurdle, the immediate swing high, and that is the probability we are counting on, and we are trying to see if there are any emerging trading opportunities for us to get involved. So coming to the lower time frame chart of 4 hourly, we have the regression curve as well as the pivot point series. Both of these technical indicators are pointing to the bullish undertone in the NZD USD, this sharp reversal which we saw happening closer to the USD 0.6560 levels also gives us much more hope of this undertone being sustainable, and we can expect, if we are lucky enough to get the entry anywhere in this price band around 0.6630 to 0.6650, I think we can expect pretty decent risk reward ratios, and the next hurdle is going to be the first resistance. So we have plenty of room for the NZD to run higher, and that is going to give us excellent risk reward ratio also. So coming to the 4 hourly chart, if we want to pinpoint the entry point, I think we will have to rely on this confluence of 50, 100 and 200 SMA. We have these SMAs concentrated around 0.6630 or below that, and right now the price action is far away. We have the price action around 0.6665, so we need the correction of around 30-35 pips from the current level for the NZD USD to get closer to our desired entry point, and then only I think we will be in position to optimize the entry and exit. Even now there is nothing wrong in going for the buy trade, but if you go for the buy trade straight away, that is going to increase the risk, as we will have to keep the stop loss anywhere closer to this immediate swing low, which is there around 0.6580. So that will entail a lot of risk on our part, and if we want to cut down on that risk, then I think the only way to go for the lesser risk is to wait and see if there is some sort of correction in the NZD USD, and after the correction we can rely on the consolidation phase low to act as our stop loss also. So let's see how things shape up during the North American trading session for the day. And if we are fortunate enough, as I said, we can cut down on the risk, and on the higher side, we can target the price levels of around 0.67 or even more than that. So roughly speaking, we will be getting the risk reward ratio, which will be fairly close to 1:2. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.